Alrighty, folks. The market has definitely been, let's say, bullish. Yeah, let's say bullish. I don't believe it. So you might notice I have slammed a bunch of more money at this account. It was, when we started this game, it was with $100 back uh, a year ago when I started with this basis trading, and I kind of went off the rails a little bit. I will admit that. I haven't been playing this particular strategy exactly the same because one, I'm learning about it as I was doing it. I had more of an idea and had been running a basis trading system for quite a long time in other capacities, and figuring out how to do it on crypto was natural to me, and I didn't have to worry about it. This is a whole different ball game, folks. This is not quite the same sauce because we can do other things that wouldn't necessarily happen, I don't think. And if we believe it or not, we're gonna find out in real time together, folks. I figured this would be perfect because if we go and look at some of my trading lately, I have taken some profit on the longs back several days ago. And then starting on the 23rd, 25th, 26th, 27th, I was taking more and more short positions here. A little at a time, increasing as as it made sense, Martindale style or whatever you want to call it. But then I'm running out of kind of my situation here. Well, if we flip over to the pools, and you can see I've been chasing um, the pool situation here. So I started with one range, and then when I went out of that range, I picked a slightly larger range, thinking, all right, we're not going to be in that crazy of a market. Um, and we're just going to stay in that range we talked about. Well, we busted out of that range too, so I had to add another range. So now, what do we do about it? Well, I was looking and reading docs and checking things out and just kind of figuring out, and it hit me right here. Removing liquidity will result in a new trader's position. If you already have a position, they will be merged. So this is not actually a $300 loss here, folks. This is going to add, um, yeah, I don't believe. I don't know how they say this could be a $300 loss. Um, or if we remove this one, it's also a $300 loss. So I think the way they calculate that is kind of weird. They're maybe saying it's a $300 loss. So why, if I'm taking out 1.1 ETH, it's a $303 loss? Or if I come down here and take out zero point 0.4 ETH or $78, it must have something to do with, well, so yeah, I'm in 100% US dollar. So I'm not holding any ETH, but I have to provide, that's the ticket. I have to provide back the ETH. Um, well, let's just go ahead and do it. I want to get out of a position anyways. Um, I don't really want to get out of this one um, quite yet because we are about $100 away from it. So I think we might be able to still trade down there. And this is the type of decisions that are going to have to be made if you're running this particular, because this is no longer strictly basis trading, folks. These are um, very much different. And I see Bitcoin and Ethereum are pumping still. So let's figure this out. So let's just kind of go in. This is the lower range that I had initially, and there's $2,600 in liquidity there, and I pulled $21 of fees out of it. So let's go in and take a snapshot of the what I currently have. So we're gonna say I have 1.1 ETH right there, 1.18. So 118.8, 118, and I have a screenshot of it if I need to pull it up. So I'm sitting at 1.18 ETH short, and this is telling me I'm holding 100% ETH, but we have to balance out. I don't remember what the number is, but it has to balance out when you remove this liquidity. So if I pull 1.18 ETH out, so yeah, if I pulled this out to the tune of 1.11, no, that's the same number. Weird. Why is that the same number? Oh no, it's 188. Oh, that, see, when I was back doing it, I balanced that out. I remembered. Okay, now I remember that. I balanced it out pretty close. I wasn't exactly close, but I was pretty close. Let's call it pretty close. And let's pull up a Finder window over here. Maybe not. Where's my Finder, motherfucker? There we go. New Finder window. Bam. And we'll get the screenshot. So yeah, we have, boom. Alright, so we can move that back over when we're done here. So it's 188 and 118. So we're just going to remove this and just kind of let the ball roll where it rolls, folks, and see what we end up with when I do this. My goal, I hope, is to give me 1.18 short at the current price, and we'll be sitting pretty. Alright, so we're going to go ahead and let that do its thing. It's probably already done. So let's go back and look over here into the trade. Haha, folks. Hell yes. Alright, so now that helped quite a bit. I was hoping it helped a little more, but I can go remove some more liquidity and we can keep track of this number now. We can then go make a screenshot there. And so then I can come over and we can remove this other liquidity that's out of range. Yeah, so I was thinking we might be able to get to there, but I've got it covered. I'm covered a little bit. And since we're learning, let's go ahead and remove this position here. Oh yeah, so that's only going to be $8. Yeah. So we'll go ahead and remove that. Before I do that though, let's go and take a new screenshot of this. Dude, Ethereum is still pumping. Alright, so then that's our new position. Alright, so then if we come over, and so we're at 415.36. So then if we come over here and remove, yep, well that one is out of range. I'm covered it. We shouldn't get back that low again, I'm hoping. So let's just remove this one and actually confirm it this time and see where that sets us. Because that, in my pea brain in there, that should raise. If that's increasing our position, that should raise our number a little bit here and give us a little bit better of a position. And yeah, boom. So perfect, folks. Perfect, perfect, perfect. So now we look like we're in the hole quite a bit here. But we're not. I don't think we're in too bad of a position here. I don't like these numbers here. Um, I definitely don't like being below 25. I said before, keep it at 50, and so I went hardcore at this. I should have thought about this process first. I didn't understand that you can remove the liquidity and be brought into that position short now. Whatever it worked out. If it was down low, you would be long. So that's what we need to understand about this is um, it was creating a new trading position for us that we can then go and close for a loss right here if we wanted to get out of that position. But that's not the game I play, folks. I'm in this for the longer term, and I can just keep creeping this up. If I can get that number up to like 1500 now, um, I'm certain that we're gonna touch 1500 again when the Fed decides to start getting out there talking again and spooking up the markets and things go downhill again. And then as soon as we start going downhill, I can get off of some of the short position, taking profit all the way. So um, this is interesting, folks. So let's recap. I was sitting in three impermanent positions of liquidity. I don't necessarily expect a lot more downside, but I do have about a couple $100 worth of downside here. And to get out of this liquidity right now, I would lose only $2 in impermanency, but that would then put me an additional um, zero point 0.6 ETH in the short. So that's going to give me now an addition. If I were to do this trade or do this liquidity removal, it would give me an additional $113 or zero point 0.069 ETH short position because I'm taking the impermanency and making it permanent by because of and in that process I would lose at face value right now $2.81 at the current prices of Ethereum. But that means if I simply let it go short again, since I'm holding short, let the price come back, I could then sell it. So unlike an iron condor where you've got to get out of it and there's expiration times, we've just fixed our impermanent position. We now have drawn a line in the sand effectively and says, all right, we now only want to be short and we can then collect the trading fees from this and then hold on to the short until we can get out of it. And maybe now that I can, you know, you know, it's going to be a little harder because I've got 2.3 ETH short. So the averages are going to I would have to have another 2 ETH to trade with, and yeah, there's 10x leverage, but I don't even have 1 ETH that I want to put into this. So what I need to do is just hold on for a while, wait for the market, don't get hasty and just close this position for a substantial loss at this point. Because that if you're trading with leverage here, that's what we're doing, folks. And right now we've got the leverage bar a little bit too far pushed, and that's definitely my problem for not fully understanding exactly what I was getting into here and how different things technically are from the old school MIC decks of holding on to some long and literally holding short during the best shorting period in crypto history because people are calling it crypto winter. Um, so now we're in a different market. We're definitely in a different trading market. The perp.com, as you can see from the big red bar here, we're pushing higher all day long, yet for the last 8 hours, there's more shorts in this market than long. So there's still very much negative sentiment out there, but price keeps getting pushed around. I'm suspecting this is, just a massive, what they call a short squeeze, where everyone's FOMOing in, thinking, all right, the bottom's in, the bottom's in, and then the whales are going to come in and say nope, and they're going to start dumping when the market, the rest of the markets, when Nasdaq starts, throwing a little more red days at the picture. Um, we'll have a 200, maybe 150, $200 price correction, and I will start dumping some short when I do that. So, um, this is very much a learning curve for me process, but this also helps me, um, in building, and in getting trapped in these circumstances, because if we put this into a smart contract, because that's the ultimate goal here, folks, is I can sit here and talk about this, and nobody probably knows what I'm talking about, other than maybe a few other quant traders, or if you were a desk trader before and you've traded futures and understand some of the commodity futures out there and how algorithms play into those kind of trading. Maybe you understand what I'm doing here by being short and long and all that crazy stuff. And but it would be nice if someone could say, all right, I'm going to contribute, say $150 USDC. Go ahead and let's make as much money as we can without going hard on the leverage like this, or give us the ability to use leverage when we need it, and to but keep that leverage low until we have to adjust things, and kind of play this game and collect fees on the order of these trading pools more, and then only when we do start getting topped out of our ranges, go in, remove the liquidity, and then manage that short position. um, and I believe we could pull that off with our own bot network. There would have to be a lot of research and development, and that's why I want to start discussing this, and getting more people involved as it makes sense, and getting more traders out there, bringing more people just to trade this and use the perp.com website, um, and to get that muscle memory and to figure out how all this stuff works, and to make a few bucks hopefully along the way, and don't get trapped into a $500 loss right now on a position. But of course, let's knock it down. If that's 10x leverage, I'm only down 51 bucks in real world. So I mean, you got to look at the leverage for what it is. Yeah, I got a little hard on the leverage, and this market is absolutely pumping. But if you pay attention to this number right down here, as soon as that market goes up, so it's 1758.62, boom, 68. So since we provided Ethereum as our collateral, our liquidation price is constantly going to be going up, 73. So as the market goes up, our liquidation price is going to go up. So that's why if you were paying attention, I slammed a bunch of more Ethereum at this problem, and ooh, why is there a negative number? Oh, probably because I'm so short now. See, that's disconcerting. Wait, one. See again, we're learning in real time, folks. We're learning in real time. All right, I don't see nothing saying I got liquidated by. Oh, so that must mean I'm well. So there's free collateral. I don't understand why that would be negative, folks. Yeah. I don't understand why that would be negative. It's got to be due to the position that I'm in, and the short is a loan, maybe. Um, yeah, your USDC is to and withdraw. Learn more, because I don't have it negative. I mean negative. When your US balance is debt, will be shown as zero and you're unable to withdraw. However, total collateral for going to buy are unaffected. Learn more collateral liquidation section below. To enable withdrawals again, you'll need to deposit enough USDC to make the balance positive. Your collateral may be converted to USDC when any of the following conditions are met. Margin ratio falls below 6.75 plus a basis point 50. USDC debt, non-USDC debt, USDC greater than 10,000. When collateral, your USDC converted at a rate formula shown below. In no specific order, huh? That's interesting, folks. It simply has to be because I've got such a large short position here. Um, is the only thing that I can assume that it is. And yeah, see, we got to go all the way up there. And I don't see it happening, especially if we go out to a day chart. Yeah, see, there's 1775. And again, as price pumps, we're going to get those pumps of the liquidation price. And I could just slam a little more ETH at this problem, and it'll go up even faster. But yeah, look at there's 4 ETH short coming in. So yeah, I think we're sitting in a good position now. We were quite a bit down here because I assumed we would stay into this channel right about here. I didn't even anticipate jumping up this far um, based on the 1500. When I when I had that second round of liquidity in there that I've already removed, I had put the top at 1500, thinking, all right, we're not gonna, because we'd already pushed up and pulled back on that. That's the day I did it. I was assuming here that was just our little pull, our little tweak into the new zone, and price discovery was going to come back, and we would just continue to rock, which I think we may end up having because it does fail quite handily when it's ready to fail. So, um, alrighty, folks, I think I've rambled enough, and I definitely learned quite a bit tonight. So, again, we removed the liquidity and had, you know, a much smaller starting position, and then we removed more liquidity and are sitting at a much larger position of short in this market. So now we need the price to come back a little bit. And then what I'll do over the next few days is keep an eye on this. If we do push a little closer to the 1700, I'll just slam a little bit more Ethereum at this problem, and so we can keep that um, leverage as under control as we can. Get this up to like 20. I would be absolutely perfectly happy. And then yeah, we're gonna have to source a little more USDC, which is actually better for the it's because it gives us a full weight. The other problem, I wish they would weight this a little bit more um, evenly, but there's probably a reason they don't. But yeah, if the benefit of depositing Ethereum is we basically have a self rising liquidation price. It's like we'll never get liquidated unless there's a really crazy move in the market, and we just happen to get liquidated by just sheer chance. But like I said, I really don't see that happening. Um, Especially as we get more and more of these companies reporting coming up, and the when you look at the economy of everybody in the world else in the world, there's no reason other than unless we're going to decouple from stock market. If crypto prices, especially Ethereum, decouples from the stock market, I might be trapped in this for a hot minute. But then once other people realize, hey, this is no longer as coupled to the stock market, maybe that funding rate goes positive, and I can slowly start chipping back at that and keep rising my my get out price, and then once we do get a pullback, because we will get a pullback. I'm not worried about being trapped into this position because this is a perpetual contract, folks. This contract doesn't expire. I don't have that same concern as a um, you know oil contract. I'm not going to take delivery of 1,000 barrels of oil if I have a contract. This contract never expires here. So, alrighty, folks, I am going to get on out of here and keep holding on to this position and adding to it as it makes sense. Like I said, if we push a little higher up into 1700, I'll slam um, a little bit more Ethereum at the problem to get our liquidation price to go even higher. But like you see here, there's definitely some shorts coming in, so I'm not at all worried, folks. All right, check us out on Discord. The link is down below. Go ahead and open yourself up a position, or put yourself a small, couple $100 worth of liquidity in here, and pick a wide range. Do the 20%. Um, you know, um, like you can say here, you pick one. We're gonna go up then down or down then up. If you don't want to pick a range, want to pick a range, go ahead and pick your range like I did, and just keep it low. Keep it with money that you can afford to lose. If you screw up and something happens, it's no big deal. It's a learning experience. Otherwise, let's do this. I'm going to try to get this set up in a situation where we can script it, where we just have a different web interface where you drop in some USDC and we give you a reasonable APR that's sustainable and you know maybe as delta neutral as possible, or several different options. Who knows what we're going to get to, but this is what it is. Starts with, folks, is learning how to do this stuff, learning how to leverage these brand new technologies that are just now barely into their infancy. So, all right, folks, I will catch you in that next video.